Imagine being in an 11th century Italian marketplace where banking first sprouted. The term bank comes from the Italian banca, meaning bench. Here, early bankers conducted transactions and introduced bills of exchange, the precursor to modern checks. They also provided loans to influential entities like kings and churches, thus starting the intricate credit systems we see today. From Italian marketplaces to global services, banking has made significant strides. It's a journey filled with innovation, ambition, and a deep understanding of the evolving needs of society. Fast forward to the 21st century, where banking has evolved into a complex machinery. From its inception in medieval Italian markets, banking has become a global industry, impacting every aspect of our lives. At its core, a bank is a financial institution that accepts deposits from the public and lends these funds out. Depositors entrust their money to the bank, and in return, the bank pays a small amount of interest. This is the bank's way of appreciating us for letting them use our money. Put these deposits to work by lending out to individuals and businesses who need it. These loans could be for numerous purposes, like buying a home or starting a business. The bank charges a higher interest rate on these loans than what it pays to depositors, and this difference is termed the interest rate spread. This is a primary way banks make money, but that's not it. Banks also offer various services like credit cards, which allow us to buy now and pay later. If you don't pay the full amount, the bank charges you interest on the outstanding balance. Then there are fees for maintaining your account, for using an ATM, and many more. These fees, when spread across millions of customers, sum up to significant amount. Banks also profit from the foreign exchange market. Every time you exchange your dollars for euros or vice versa, the bank makes a small profit. Banks also offer custodian services for large institutional investors, charging a fee based on the value of the assets they manage. Moreover, banks make money from trading in financial markets, buying and selling securities, currencies, commodities, derivatives, and other financial instruments. The modern bank is a financial supermarket, offering a diverse range of products and services. It's a lender, a broker, a trader, an asset manager, and more. And for each of these roles, it charges a fee, making profits in the process. They provide the financial infrastructure businesses need to thrive and economies need to prosper. As we continue our journey through the wild world of banking, we'll see how this machine has evolved over time, how it's been tested by crises, and how it's adapting to meet the challenges of the future. But what happens when this machinery falters? 2008 was a financial nightmare that saw brothers collapse due to risky banking and irresponsible loan handouts. This resulted in a housing bubble burst, instigating a worldwide economic chain reaction. Stock markets plunged, unemployment surged, leaving economies on the verge of collapse. The only remedy? Huge bailouts to stabilize finance. The 2008 crisis was a wake-up call for banking institutions worldwide. So, what happened after the dust settled? Following the 2008 financial crisis, it became evident that banking needed a transformation. The unregulated risk-taking that led to the collapse had to be curbed, initiating a new chapter of reform. The first measure to prevent a similar disaster was the introduction of new regulations, designed to increase transparency and limit risk-taking. In the US, the Dodd-Frank Wall Street Reform and Consumer Protection Act was enacted in July 2010 to tackle many issues contributing to the crisis. It established new agencies such as the Financial Stability Oversight Council to identify risks and the Consumer Financial Protection Bureau to ensure consumer rights. Significant measures like the Volcker Rule were introduced to prohibit banks from investments. In Europe, the European Union launched reforms to create a safer financial sector, including stricter capital standards for banks and arrangements to handle failing banks. These regulations aim to prevent the need for taxpayer-funded bailouts in the future. However, they were met with resistance from the banking lobby, claiming these could growth and innovation. Despite this, the regulations stayed intact, reflecting the determination of governments to evade another crisis. The aftermath of the 2008 crisis began a new era of banking, characterized by increased oversight, stringent regulations, and a commitment to rectify past mistakes. The banking faced challenges adapting to these changes, but it proved its ability to evolve. And while the transition was difficult, it was also necessary. Changes marked a new era in an era of more oversight and tighter regulations. But the story doesn't end here. the banking world is seeing a rise in alternatives. As the after-effects of past financial crises clear, new players enter the banking arena. Credit unions, crowdfunding, microcredits are some of these alternatives. Credit unions prioritize members' financial welfare over profit. Crowdfunding enables fundraising from numerous contributors. Microcredits assist entrepreneurs in disadvantaged communities. These alternatives focus on shared value, changing banking's landscape. They remind us that banking can be more than just a profit-driven venture. It can also be a force for good. So, why does all this matter, you might ask? Simply put, banking plays a pivotal role in our lives. It safeguards our funds, facilitates transactions, and drives economic growth. It serves as an intermediary, connecting lenders to borrowers, and significantly impacts monetary policy. Post the 2008 crisis, new models have emerged, challenging traditional banking. As we look to the future, we must consider how technology will revolutionize banking and ensure it benefits all. The future of banking holds unlimited potential. It's more than just money. It's about how we, as a society, choose to manage it. Thanks for tuning in. If you enjoyed the video, don't forget to hit the thumbs up button. Your support means a lot to us. While you're at it, subscribe to stay updated with our latest content. Got something on your mind? Drop us a comment below. We'd love to hear from you. See you in the next video.